would be detrimental, and I would honestly expect a move to 20,000. So if you break this low, which is around 24,800, all right, if you break 24,800, start looking for 20,000 support on Bitcoin. This one down here is unbelievably important because it mirrors the pivot low, and it was just slightly higher from this point over here, right? So if we come down and we take this out and we make a lower low and lower low to that, that would be detrimental, and I would honestly expect a move to 20,000. So if you break this low, which is around 24,800, all right, if you break 24,800, start looking for 20,000 support on Bitcoin. As long as you hold this, technically speaking, you could easily move back up into this level, which will be resistance, and break out and go as high as 30. Now, what's interesting is if we got the ETF news, which is due in about 20 to 21 days from the SEC, potentially allowing Bitcoin to have a spot ETF, BlackRock, Fidelity, all these other players. If that were to happen, guys, then you would absolutely see us potentially popping to the upside, right? We potentially could go back to 30,000. One thing I do want to point out, and again, this is something new on Bitcoin. Let's just say we do have a move up here. All right, in fact, I'm going to quickly zoom, or actually we're going to drag this chart over. All right, so here we have this chart. Now, let's just say that we get a move up on spot ETF news. All right, and then it starts to curl over. Can anyone tell me what that pattern formation could be? Possible head and shoulders pattern. Now, again, this is speculation because I don't know if the ETF will get approved, but if the ETF gets approved, you will get a pop. There's no doubt about it. When you're looking at head and shoulders and you see the pop, this shoulder must remain lower than that high, which is around 32, just under 32,000, for it to be valid as a head and shoulders. If you take out that line, then it is no longer a head and shoulders. And like I've said, if you can establish yourself above 31, 32,000 and stay there for probably 7 trading days, you likely are heading higher. But if you don't, and you move up here, you now have a head and shoulder pattern, and you can actually do a measured move on this, and I'm just guesstimating here that basically you'd be looking at a move down to 20,000, okay? 20,000 would give us that target at the down. Bitcoin, again, we have this classic chart. I've given you every major resistance and support level on Bitcoin. And again, just last week, we talked about how Bitcoin was getting this rally, but it was going to have resistance based on this area here. What happened? We pulled back. So now the big question comes in on Bitcoin is that where does this ultimately go? Okay, so now we've pulled back off this. See all of these candles right here? They're all in alignment. You got this little pop. We came right back in here. That is your area to watch. So we're basically looking at 26,000. 26,000, you want to generally see it hold that area. We can make a case that it's a little bit below that, maybe 25.8, but that will be support, and we are coming into that support. Now, if we break that, you have this low here, which is going to be very important. That's going to be the game changer. This one's important here, right? But it's more just technical support. That's all it is. Downside of a head and shoulders pattern. All right, by the way, by no means am I saying that pattern's going to form, but as a technician, I need to be ready for anything that occurs in the market. All right, the S&P 500, check this out. What we saw last week was a triggering of a head and shoulders, and very, very clearly, right? So if we zoom in a little bit here, we can see this crystal clear. We have the shoulder, the head, and the shoulder. All right, so now as we come down, it's not going to go straight down. Nothing goes straight down unless it's really like detrimental to the company. And this isn't even a company. This is the S&P 500. We have broken. So my guess is we're heading here in this range. So my guess is you could wick down here and then you get a bounce. So if we flush there, that's what I'm looking for on the spiders. I continue to remain bearish overall on the spiders, but understanding that you will get bounces along the way. All right. Now, again, how does the Head and Shoulders fail? Let's talk about this because, again, so many people hear Head and Shoulders, it's triggered, oh, it's got to, it's going to, there's no doubt in my mind it's going to go down. That's BS. There's always doubt. No pattern, nothing in the markets is guaranteed. And so way this Head and Shoulders would fail, and by the way, if Head and Shoulders fail on a decent amount of times, if you ever have a daily close back above this line, it's failed. The pattern's done. There's no more power to that pattern. So just remember that. Right now we're below. The probabilities favor us continuing down, but probabilities, as we know, 70%? Still great probability. That means 30% of the time, you could easily go right here and fail that pattern. Always remember, guys, there's nothing that's infallible in the market. There's no one that has the absolute zero, unless you have insider information, which I don't have. This is the US dollar chart. Now, the reason why this is important is the market likes to move inverse to the dollar. If the dollar goes up, the markets go down, and that's the name of the game. So what's happening here, this is the daily chart of the dollar. Not only do we see a sharp move up in the US dollar over the last really 3 or 4 months, but look at this. We're green again today. I know it's hard to see. And look at this. We're now into this resistance level right here, okay? Now, what it means to me is that the dollar is short-term extended, and it's also into resistance. So resistance 1, 2, and 3. Now, again, you'll hear people talking about, wow, the dollar is going to keep going up and up. I don't buy it, and I'm still not buying it. We're still into resistance, and a good technician, a good technical trader doesn't buy it unless it breaks out. Now, again, remember, everything I do is probability based. So right now, hitting this trend line, you're into resistance. If we break through it, a new ball game starts. But right now, we're still into this level, and therefore, to me, the markets again are into a point on the dollar where we're at resistance and we may pull back. If we zoom in there, that's today. This is the current candle. It is green, which means, what does it mean for the markets, right? It means markets are down this morning, which again is continuing the sell-off from yesterday. But also, we are into the high pivot for the last 3 days. In other words, the dollar has been stalling here, but trying to break out. It's trying. You got to give it credit. It is trying to break higher, but as of now, it's unable to. So got to keep an eye on the US dollar. If it breaks out, that's possibly a very big negative for the overall markets.